Hello there, this is fairbinaryoptions.com. So let's write here on the screen the website that we are on, fairbinaryoptions.com, and we are continuing our Binary Options Academy project. As you very well know, if you go on the website and look for the Academy tab on the tabs on the upper line there, you will find the projects there. We have a lot of projects, starting with classical technical analysis and moving on with fundamental analysis, from beginners to intermediate and even to advanced, for all kind of traders. Now in this series here, this is being called Oversold and Overbought levels, and of course it is about indicators, and not any kind of indicators, but overbought and oversold levels. What is the standard interpretation and how a trader should position on it. Of course, we're going to have two parts for this mini educational series, and I would like to start with picking any indicator that you want. Overbought, by the way, overbought and oversold levels are referring to oscillators first of all, so not to trend indicators, as you will see later in our projects due for this month of August. So this is the JForex trading platform, but if you go on the menu and you look for the indicators and click to add indicators, then you'll have the overlap studies. The overlap studies basically are the trend indicators to be addressed or to be put on the screen, or momentum indicators. Under the momentum indicators you have basically the oscillators, and here they are referring to overbought or oversold levels. Now you know the classical one is the relative strength index. We even discussed this one on the Binary Options Academy, where we have the RSI overbought and oversold levels. But I want to show you in this series here that each and every indicator has overbought and oversold levels. Now for the RSI, for example, the relative strength index, the standard interpretation is that anything that goes above 70 is supposed to be overbought level, and we should go and buy put options or sell the currency pair, and everything that is below oversold levels, below the 30, should be a level to go and buy call options, because those are oversold levels. Well, that is true and not. I mean, take a look here on this trend on the euro US dollar. If you happen to go and buy call options, alright, this is a 4-hour chart, but to buy call options when the market is clearly oversold according to the indicator, then you're going to be in for a painful ride, in the sense that this market only moved to the downside rather than reverse. Of course, now depending on the time frame and depending on the expiration that you choose, you might be successful, but more clues about how to trade the RSI with overbought and oversold levels are to be found on the Binary Options Academy, on that project dedicated. I would like to show you in this series moving forward that each and every other momentum indicator that you might decide to take a look at for overbought and oversold goes exactly the other way around, like the market, like the standard market interpretation is. I mean, in this business 95% of people or traders are losing money. Well, if the standard interpretation goes for a specific level to be overbought or a specific level to be oversold, then maybe the right direction to trade, or maybe the right trade to take, is not into that area, or is to look the other way around. Take for example the Demark Indicator, one of the most famous indicators of them all. If you apply it on the chart, it goes and trades with, again, 0.7 and 0.3. They are supposed to be oversold and overbought levels, but again, if you go for example and buy call options here as the market comes into oversold territory, so you buy call options here and the market actually it is at this moment of time, that you'll have a nasty surprise, because regardless of the time frame that you are looking, and regardless of the expiration date that you are going to take and interpret, basically your option here will expire in the money. You will see basically the conclusion. I'm just giving you a hint. The conclusion for this overbought and oversold levels is that you need to keep in mind that the standard interpretation is not necessarily the right interpretation. Try to look for your own definition of overbought and oversold levels, and not the standard one that is being offered by brokers, or by the general people, because it doesn't make any sense for 95% of the traders to lose money and still overbought and oversold levels to be correct. There is one catch. Overbought and oversold levels are working extremely good when the market is moving in ranges, when a consolidation area is formed, a contracting triangle, or a flag, or a pennant, or any kind of a range. Then overbought and oversold levels are extremely good. More clues are going to be presented on the second part of this overbought and oversold levels. We'll take a look at other indicators as well, and we'll take a look at ranges as well. So stay tuned here on FairBinaryOptions.com, please.